Peter Lynch, a legendary investor and the former manager of the Fidelity Magellan Fund, is renowned for his practical and relatable advice on investing in stocks. His investment philosophy emphasizes a long-term approach, thorough research, and understanding the companies you invest in. Here are some of his notable pieces of advice and quotes, along with explanations. 1. Know what you own and know why you own it. Explanation. Lynch stressed the importance of understanding the companies you're investing in. He believed that investors should not buy stocks based on hype or trends, but instead have a deep understanding of the business and its fundamentals. This means knowing what the company does, its competitive advantages, its potential for growth, and the risks involved. Lynch encourages investors to ask themselves, if I had to explain the stock to a 10-year-old, could I do it? If the answer is no, then you likely don't know the business well enough to invest in it. He also emphasized the importance of keeping up with the company's performance after buying its stock. 2. In the stock market, the most important organ is the stomach. It's not the brain. Explanation. This quote emphasizes the emotional aspect of investing. Lynch is pointing out that while knowledge is important, the ability to handle market volatility, particularly when stocks drop, is even more critical. Many investors panic and sell during downturns, but Lynch believed that those with the stomach to hold through short-term losses would benefit in the long run. He encouraged patience and discipline, rather than making emotional decisions based on short-term market movements. 3. Far more money has been lost by investors trying to anticipate corrections than lost in the corrections themselves. Explanation. Timing the market is notoriously difficult, even for professional investors. Lynch advises against trying to predict when a market correction or crash will happen, as doing so often leads to missing out on significant gains. Instead, he advocates for a long-term approach to investing, focusing on finding great companies and holding them for extended periods, regardless of short-term market fluctuations. 4. The person that turns over the most rocks wins the game, and that's always been my philosophy. Explanation. This quote reflects Lynch's belief in doing thorough research and finding investment opportunities that others might overlook. He believed that successful investors are those who put in the effort to thoroughly research companies, analyze their fundamentals, and look beyond the obvious choices. His approach involved finding hidden gems in the market, companies that are undervalued or overlooked but have great growth potential. 5. You get recessions, you have stock market declines. If you don't understand that's going to happen, then you're not ready, you won't do well in the markets. Explanation. Lynch highlights that market downturns are a normal part of the stock market cycle. Investors need to be mentally prepared for these declines and recognize that they are inevitable. Instead of fearing recessions or market crashes, investors should view them as opportunities to buy stocks at discounted prices. His advice is to maintain a long-term view and stay invested through market cycles, as the stock market tends to recover over time. 6. The real key to making money in stocks is not to get scared out of them. Explanation. This ties into Lynch's broader philosophy of staying calm and avoiding panic during market volatility. Many investors sell in a panic when stock prices drop, locking in losses. Lynch advises against this reactive behavior and encourages staying the course. He believes that successful investing requires the ability to hold on to stocks during tough times, as long-term growth often outweighs short-term dips. 7. Everyone has the brainpower to follow the stock market. If you made it through 5th grade math, you can do it. Explanation. Lynch wanted to demystify stock investing and make it accessible to everyday investors. He emphasized that you don't need to be a financial expert or have advanced math skills to be successful in the stock market. Instead, with basic research and a common-sense approach, anyone can invest successfully. He was a big proponent of the idea that individuals have an advantage over professionals because they can invest in companies they are familiar with from their daily lives, like favorite retailers, products, etc. 8. The simpler it is, the better I like it. Explanation. Lynch believed in focusing on simple, easy-to-understand businesses. If a company's operations or business model are too complex to understand, it's often a sign to avoid investing in it. His approach was to invest in straightforward companies with clear business models and growth prospects. Complexity, in his view, often led to uncertainty, which increased the risk for investors. Number 9. The stock market is a device for transferring money from the impatient to the patient. Explanation. This is one of Peter Lynch's core beliefs about long-term investing. He believed that those who are patient and can wait through market ups and downs are the ones who ultimately profit. The impatient investors, who react quickly to market movements, often miss out on the bigger gains that come from holding stocks over time. Summary of Peter Lynch's investment philosophy. Do your homework. Research and understand the companies you're investing in. Stay calm and patient. Don't get caught up in short-term market fluctuations. Think long-term. The stock market will have ups and downs, but over time it tends to grow. Invest in what you know. Use your everyday experiences to